How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar, EU. So we came to the arrival of wanting to trade this pair for the month of August because last month was a small range cycle. There is some type of interest rate differential between the ECB, the European Central Bank, and the Feds. And seasonally, they are moving in market correlation. So the euro seasonally for this year, at least for August, it is stating that it's going to be bearish and the DXY is going to be bullish for the month of August. Now, does it mean the seasonal tendencies will come to fruition and actually produce that idea? But we will follow the market to see anything that we can provide context to support that narrative. We'll try to look and exploit that as well. So we can see price recently just ran out that 20-day look back high and IPTA high here. And now we got sell side down here on the daily chart. So is this probably a liquidation or a purge on buy stops? Anybody that was selling that has a stop loss at this high, is price now going to revert back down below August's opening price to get down to the sell side? Now, if it's going to close down for the month, selling after up candles would be ideal. But right now, currently, we do have bullish momentum. We broke a swing high formation here. We also broke another one, but this is just the start of it. We would be on alert for price to continue going higher by printing a higher swing low. So if price prints a higher swing low, we might see this continue to push higher and follow a bullish trend. Now the DXY has been selling off, and we'll check to see if the DXY is going to make a rebound right below August's opening price and push higher. So if we take a look at the DXY, you see how the DXY took out that 20-day low here, but it also has that bearish momentum behind it because it's running a swing low formation. So we're at caution. We're like, okay, pay attention. Commercials may be selling. This could possibly be a pullback inside this CIBI here, and price continue to go lower. We're witnessing very volatile times, especially with the Bank of Japan and everything that's going on currently. We can see the opposite happening here. You need a lower swing high that forms inside this buy side imbalance. There's also a volume imbalance here, but if price is going to make a higher swing low, it should want to probably do it within this range here from this candle to this candle here. See a higher swing low form inside and continue to push higher, creating higher swing highs, higher swing lows. And then DXY would do vice versa. It would do the same thing, create a lower swing high inside that fair value gap, trade up and continue that trend lower. It may not be very apparent right away, but as the days progress and the weeks progress, you'll start to see that the market is probably definitely taking a stance. If we also include intermarket analysis, we can see currently the bond yields. Let's take a look at the bond yields because the bond yields definitely are important to the DXY. You see the bond yields has been dropping. 2-year yields has been declining. 5-year as well, 10-year, and 30-year. So if the bond yields go down, there could be signs that maybe the Feds will cut rates this year and the dollar is going to lose strength. It's going to flow back out into other currencies like euro, British pound, New Zealand dollar, CAD dollar, yen. Anything that has probably a similar interest rate will probably be the next boat they're going to jump into. So if they think the dollar is going to get weak, okay, maybe we should park our dollars into pounds. Okay, so we sell the dollars to buy pounds. Okay, maybe we should park our dollars into yen. You can see the yen recently too has been taking off because what has happened with the Bank of Japan? They've increased their interest rates and they had huge interventions last month. Let's see where you can find like UJ or the yen cross. Here we go. And do the futures. It's going up in a straight line, but if you take a look at it, the bullish trend formula is currently happening. We had obviously a fake out. At some point, there's going to be a fake out on traders or failed opportunity to go in that direction, and you see price breaks a swing high. Very simple ideas. We'd be on alert. We'd assume that price would maybe make a higher swing low in here. It doesn't. It makes it higher in here. You can see how that swing low is higher, and look at all the swing lows moving forward. Each most recent swing low is higher than the next one. We do have a false break again here. Probably get traders to go short, chase it, but they run it back up again. And this swing high as well is still higher than these ones too, and it's still running rampant. Vice versa, we take a look at the swing points. So let's say this swing high, this swing high. You're going to see now price is in a bullish trend because it's printing higher highs and higher lows. Everything vice versa, DXY. Take a look at the DXY too. Look at last month. It was printing lower lows and lower highs. And may continue that idea. It was getting choppy at the end. You'll get that sometimes. You'll get weeks where it doesn't do much because it's either exhausted or satisfied to the point it drawed itself down to. But we can see price just run this low. Could there be a long? Could strength come back into the dollar? I don't think so. I also think that gold make all time highs too. Gold may continue going up higher. We may see price trade higher, get back up to this high, make record highs again. Still a lot of fear in the world geopolitically, a lot of wars still going on, a lot of corruption. So we are going to probably see people park their money back into gold as well. If we look at gold standing the test of time right now, I think it's one of the things that's going to be there when the monetary policy or the global financial world, when the systems start to change, I think gold will probably be in the end game, when things start to collapse and systems start to fail and things start to break and we realize that debt cycles are inevitable and we just can't keep doing it. I think gold is what's still going to outperform. Not saying what level it's going to get up to, but it's just outperforming right now. You see gold versus any currency. There's gold versus Australian dollar, month after month, year after year, performing good versus euro. Take the same thing at like CAD. You can look at all the pairs cross, you know, gold's been doing its thing. Gold versus the Z and dollar. But let's just regroup before we end. I'm back on a daily chart. So we're going to watch these swing points because it's important. And keep in mind that the seasonal tendency did say that euro should be bearish, dollar should be bullish. We'll see if that is something that we could possibly play out here, but we're not going to try and force it. We're just going to look at the swing points right now. So swing high broken, we're going to be waiting to see if we get a higher swing low. So type of retracement and then signs to want to see price go higher. If we take a look at correlated pairs, right, a little more into market analysis, we want to see if they're showing signs of being bullish. So this is a bullish signal to me. A very simple one, daily chart, smash candle via Larry Williams. This candle closes below several lows here. So this is probably an opportunity where commercials could look to go long after this down day. Right? People want to chase this to the downside, especially it's a large candle. It also liquidated a lot of sell side liquidity pools, reached back down into a busy buy side imbalance, sell side inefficiency. May want to gear back up and look to go high. This could be an optimal trade entry, price going down around 62, 70.5 and 78 retracement level and probably looking to go higher. That's something here too on a higher time frame. Take a look at AU. Huge push down, huge liquidation here, and strong pullback. Right, so definitely ran down, liquidated a lot of orders, and looking to probably turn around possibly. So we'll see what's going on with this. Still not large signs here for AU for me. Nothing really rings a bell. The only thing that rings a bell is that we rated some sell side quickly and turned around really fast, gave up all those losses, regained it. New Zealand dollar, very similar to, we got a busy here. Price trading into it. Maybe price gets back to this swing high, looks to push higher, filling this liquidity void, all this selling for those days and those weeks. Recover that. We could possibly see like this was a fake out sell side parade, and now we're going to start seeing higher swing highs, higher swing lows. We'll see. CAD selling off, UJ selling off, like I said, lower swing highs, lower swing lows. The trend is there. Sometimes you get those false moves. Look how price runs out that swing high one more time and then goes short. AJ, NJ, all similar. After all those updates too, look at every single update, sell, update, sell, update, sell. So when the market is really strong, you aren't on the narrative of what the market's going to do. You could use these daily candles as insight, even the weekly chart. You got an up week, and you know that the market's really going to tank. Sell after that up week, or if you know the market's going to tank this day or this week, one of these days, you sell after an up day. Just little things you could utilize. You see, look, up day, up day, up day. And look what they're doing after those up days. The Bank of Japan is really making a strong stance. You're watching. What you're going to witness now is a currency war. It already was boiling up, and it was going to come to this inevitably. But yeah, bond yield still selling off. This could be a sell. This could be a buy signal, possibly. But we'll see. We will see, my friends. All right, my fellow traders. Peace.